All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for February 23rd, 2024. This is the Friday night edition. So we'll start with the hybrid swing portfolio. This is 30-minute charts. And we start with Alcoa. Gap down, collapsing dragon entry, standard risk box, sells off hard. It rolls over at the edge of the dragon. Take the exit before the close for a total of 1, 2, about 3R. Wouldn't be offended if you took the exit around this region. But the market had some weakness at that time. So I stayed with it a little bit longer. No trade in AI. Caught a 2 scratch in Caterpillar. In Cliff, this was a caught a 2 reentry and half an hour as it petered out near the end of the day. CVS, this was a caught a 2 on the short side when the R10 rolled over and left the dragon. Wide standard risk, fractional gain after it just kind of mucked around. It was that kind of day. DIA we held from yesterday overnight. It gapped up, and as it started to decay and came back below the VWAP, exit here for about 6R. Nice trade. Disney, we got short on the Kata 2 collapsing dragon breakdown. It sold off hard. I exited at the VWAP. I stopped and reversed because it was early in the day and it was a 1, 2, 3 entry, and cashed about another 3/4 of an R. Devon Energy, morning hook, 1R. EEM, no trade. That's emerging markets. Ethereum, we closed yesterday's emerging dragon. It basically gave back all of yesterday's gains with the gap down. Mexico, collapsing dragon short. I was slow in getting out of this and gave back like 2R, but kept 1. Mexico, gap down and short and collected 1. I thought about getting short again here. I didn't think there was enough time left in the day to trade that. There was a trade that was available after that move, though. Tried the emerging dragon continuation with China and basically scratched, and I just haven't been able to figure out how to get on that intraday. All the moves are in the gaps. That's not surprising. So this may be less tradable on a intraday basis. It may be a better swing trade, I'm sure. Intel, this was a SSC owl entry. You got the RL30 rolling over, the dragon rolling over after a harsh winter. We got about a 1/4 of an R after it did not follow through. IP, no trade. That's setting up an SSC nicely. Real estate caught a 2 re-entry on the continuation, but scratch. Coca-Cola closed yesterday's 1, 2, 3 entry for about 2R after it peaked early and then sold off. Regional banks, a scratch. McDonald's, yesterday's caught a 2 re-entry, which we held from here, gapped up and had a strong day, and halfway through to lunch we exited on the starting to fail and wanted to preserve that move with no overnight risk, and that was a 3R move. Merck closed yesterday's trade, really nice follow through, and then began to decay, so we exited here for 1, 2, 3, 4, about 5R. I thought about that short, didn't take it. It would have paid off, but I didn't really want to get short such a strong move and underestimated what was available. Microsoft closed yesterday's trade for about 2R. Marijuana, gap up and go. Standard entry, standard risk, 2R. Nike, no trade. Nvidia, no trade. Clean energy, we got short on the collapsing dragon continuation. This may be the end of that downward slide because it basically just went sideways today. But we squeezed a little bit out of it, not much. Palantir, no trade. Rivian, no trade. We may have to remove that one. It just looks like dead money. The S&P was just stable and quiet today. Treasuries was a big run up. This was an explosive move up and showed a lot of volume. I think it's people taking their excess gains from equities, maybe rolling them into treasuries. But that gave us almost 3R on that explosive move. Tesla, we closed the short or the caught a 2 from yesterday. Thought about getting short here. I didn't, but it would have paid off. Walmart, this was a overnight hold. It gapped up, and then after it decayed, cashed out about 4R. And finally, U.S. Steel had a gap up and go. I'm sorry. No, this one opened at the low and then broke out above the emerging dragon, and we finally got on board in the second half hour, standard risk, and cashed 4 after it peaked and started to collapse. I didn't want to wait for it to come all the way back. So pretty good day at work. This one is, let's take a look at this one first. So this was U.S. Steel on the sniper trade of the day. This was the close yesterday. Here's the OR3. It continued in the second bar, continued up, so we get long with the standard risk. It rolled over for a scratch. It gave essentially a COTA 2 re-entry, and when it crosses the dragon and the PSAR, I re-enter. Same standard risk as before, and this one just goes. COTA 2, or actually emerging dragon, second position after 3R in hand. And then the PSAR exit. I mean, how good is that? So that's 3, 4, 5, 6. So this one returned 6. This one returned 3. That's a 9R trade. Notice the VWAP magnet pulls right back to the VWAP, and there was one more little move up, but that's the essence of the VWAP magnet. I didn't get it, but that's how we set that up. When it's had an extreme move, then you target for the VWAP on the return in the afternoon, and not unusual to see that. This one is a second sniper trade of the day. So here's your OR3, just for fun. And now here's a 1, 2, 3 entry. 1, 2, 3 entry. With a standard risk box. By this time you got 4 dots above the 0, or 3 dots above the 0 line. So you should say, this is where you should be spending your time studying. If my initial stop was here, do I leave it here and then come up here like that's the Wu-Wei exit? It preserves this space to give it time to run up. But then when you notice, hey, that thing has just been making a really strong move. Why should I keep my stop? If I just use the PSAR, my stop would be here. When I see price up in this region, I might want to at least be here, or the lower skin of the dragon, or the spine, or the peak of the dragon. Any one of those 4 is a reasonable posture to have. If you used a trailing stop, you'd be from the highest high, you'd be right about here anyway. So anywhere in that region is really how you should be working your research to find what's personally satisfying. But what's important is the path that you take to get there. Did you use the Uwe exit like this? Did you just use the PSAR? The default position to me is if you have a wide enough stop here, the PSAR is fine. And then you can just watch the move going up. And when that gets to a certain level, you can just jump your stop up in there and lock in pieces. That's where you should be spending most of your time studying your own trading performance, trying on different alternate exit management strategies or stop management strategies. And don't worry so much about fine tuning the entry. Just 1, 2, 3, get in. If it works, it should work right away. And then you can get your risk out in any way you want and lock in gains and then figure out how to increment your stop going up. That's where you should be spending all your time and effort. 80% of your time ought to be spent on that. 1, 2, 3 exit. +3. PSAR flip, 1, 2, 3 short, standard risk box. PSAR exit for another R. That's 4R total on, I think it's Walmart, for crying out loud. Look at the traders. 0.7 for Hamad gets paid. We might have gotten a Kata 2 in here. He waits kind of for the emerging dragon. That's fine. Good exit. He waits for the collapsing dragon short with a standard risk. Gets paid after this reversal, gets paid. So 0.7 altogether. I like the work. Two reasonable trades here. He gets the emerging dragon. I think that could be a stop and reverse, but I also understand why he's waiting for it to break out of the Z3 pinch with a standard risk box, and he gets paid 1.3 to offset the minus 0.6, which he acknowledges was a late entry. There could have been maybe an entry here, which would make that a scratch instead of a minus 0.6, but this one pays for everything. There was a secondary rollover and fail. That could have been a re-entry. You would not have lost money on that trade. And just notice he's working his coaching notes to himself on time of day and target to see if that is going to adjust his techniques. Look pretty good today. This is Satya. He also traded Walmart. He gets that same entry as I did, gets paid. He gets 5R out of that because he used a smaller risk box than me. And he considered that but didn't take it and then watched it come all the way back. No upside or downside biases. Follow the price. 5R. I traded both sides, but I only got 4R out of that. So maybe I need to be studying that a little bit. Nike, he gets an additional 2. Missed the collapsing dragon. So 7R, and he feels he made a lot of mistakes today. That's how you get better. Nice work from the gang. Take a look at the weekend report now. Bullish normal, overbought, risk off. Volatility starting to get worse. Warning. Still at 100% on ETF2. The things that we had at the start of the month are still crushing it. BMR is doing very, very well. Just draw your attention to the power of the RL90 right here. That's the RL90 where it turned. And that thing is just showing you how good the long-term trend is. And you can see the RL10 and 30 kind of oscillating along, but it's clearly the RL90 is in charge of this thing. And even the RL270 is tagging along. That's this purple one. Here's where the 90 crossed over to the upside. That's very favorable. And this is strong. This is the buffer. This gray buffer right here is a 30-period Bollinger Band on the regression line. So that gives you a nice noise buffer. And this is the excess gain from here up to here. That's the double plus good gain. The summer has rolled into fall, so there is a bit of a warning here. Be careful, that's quite a large stretch, but so far so good. That 9270 crossover, warning. Here's where it rolls up. That's like an owl entry on the 90. Here's where the 30, sorry, here's where the 30 crossed the 90. Here's where the 90 crossed the 270. Both of those are favorable signals. That's a universal fractal indicator set right there. The way you get that in TC2000 is to color code the price bars as white, so they disappear. So all you see are the smoothed regression lines, and it gives you a very clear picture of what's going on. This is the 3-day and the 9-day. Very powerful breakout to the upside. This has cleared the previous all-time high. That's a lot of strength. That was your emerging dragon breakout. Good signal. This was a Kata 2 in here. So it's never too late. These Kata 2 signals really stand out clearly. There's your emerging dragon right there. Here's that bottom of the RL10. Kata 2, emerging dragon. After this little pause, this was a continuation. Up we go. Made a new all-time high today. That's the 150-day look back here. This is a 150-day look back. This is the high. That's the low. That's the range. This black box is your 30-day. That's the low. That's the high. This is your 10-day look back. That's your 5-day look back. And then this little blue, yellow box is your 1-day. That gives us a fractal look at the world. ETF 13. Leaders are continuing to lead. Japan at an all-time high, crushing it. Europe caught up. Euro-Asia caught up this week. Even emerging markets are beginning to recover from the pain and suffering. Not sure how long that's going to last, but the US slowed down a little bit this week. The rest of the world caught up a little bit this week. Only the small caps stood out to the downside. A little odd. When you add the XL series, the sector spiders, you get finance and tech continuing to crash their way north. And if you look at the blended monthly rebalancing, those are the winning positions. That's what they've earned this last month that we've owned them. Still pretty good. We'll take it. Yeah, that's standard work. Let me go back here. I always look for these value plays, buy on dip plays. Disney's very interesting. Crushed it for the month, and then that's the week give back. So maybe that could have been last 3 weeks was like this. This past week was like that. Is that a buy on dip, or does it continue to fail? I don't know, but Disney is certainly interesting right now. Whereas Boeing and Walgreens are not interesting at all. And so we could ask, how bad does Boeing have to get before it becomes a deeply discounted value play on America's industrial sector? We'll see. World market model. The US is all above average. That's all these symbols right there. Mixed bag in Asia. India really crushing it. In the strength column, that's working. The S&P has strength in finance and tech. Utilities are lagging, but the equities are crushing treasuries, real estate, blended commodities, gold, and oil. It's a real clear victory for you should be in equities. Daily report, we've seen that. Let's go to the Dow. So today made a new all-time high, and there was real strength in Dow, DuPont, I should say, Johnson and Johnson and Morgan, NVIDIA, United Health. ETFs had a lot of strength. Boeing, mixed commodities, and Disney on the auto framer. A handful of squeezes. I like real estate and Caterpillar in that stack. DIA is pretty well squeezed at 2.0 as is EFA and midcap. So a relatively quiet week, dominated by the summer. A lot of broad equity strength here in the ETFs. Only a handful of things that really suffered: Brazil, Latin America, and oil, and really Mexico. So the Latin American sectors are getting smashed. JP Morgan just continuing to dominate. I like US Steel recovering. And we'll go to our last little chart. Still a bit of a concern with this 90 starting to roll over. The 30 showed some evidence of life. The serpent is still continuing to fight its way north. I think you have to have a stop somewhere in here to protect the strength of that gain and give it back a little bit. I wouldn't give back more than that. That's really at 500. That's about a 1.5% protective stop. All right, that's everything for today. Storytelling in the morning. And Foundations Q&A on Sunday. Take good care, and we shall see you soon.